Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here today to discuss the CPI, the PPI, retail sales, and the European Central Bank Monetary Policy decision. So the CPI, as you can see here, we got this on Wednesday, and then the last three I've mentioned, we got them on Thursday, which is yesterday at the time of recording this. So let's begin. The core CPI. Okay, the CPI readings in generally were within estimates, which was mostly expected because we can't release the actual numbers. So CPI year over year for August was 3.7%, a bit higher than the estimate, and of course higher than the previous reading. The CPI month over month reading was 0.6%, and that was in line with expectations, and almost double, over like 3 times the previous reading. The core CPI 0.3%, that was slightly above estimates, and of course even above the previous reading. Core CPI was according to estimates but a bit lower than the previous month's reading. So with these numbers, this generally means inflation is like, oh my goodness, inflation is back on the rise, as you can see. As oh, wait yeah, this generally means inflation is back on an uptrend. Let's look at the CPI year over year number, because this is usually among the most watched. So let's zoom in a bit, and now you can see here, this is where we are now. So the lowest reading we got this year, and in like 3 years, in like 2 years, it's this 3% reading we got on June. This was on July. This was on July. The June reading that we got on July, it was 3%, and that's the lowest reading we got. Of course, we talked about that. You saw the video I did. This was largely due to the base effect. It was very amplified here. So now you can see inflation is back rising, and probably in the next month it's also going to be higher. One is because the base effect is wearing off. I'm sure by now you know what the base effect is. So the base effect is that we're comparing these prices to the same prices a year ago, right? So if the price difference has been smaller or significant, that's of course that's the base effect in this case. If you're comparing the current low prices to the previous high prices at that time, of course you're going to get a much smaller increase between the prices of now and of that time. So, and since, because of course I'm sure you've been monitoring the month over month CPI MoM, this is another important reading you need to watch. And as you can see, the monthly changes are not very stable. So this year's prices and last year's prices, there is going to be a significant difference, because the month over month changes are also significant. So another thing is oil prices, energy prices. We'll talk about this later in the video, but let me just say it now and also later. So energy prices are back on the rise. I'm sure you've seen crude oil was up 15% in the month of July. 15% in the month of July, up I think 2 or yeah, I think 2% in the month of August, and then now in September, crude oil is up. I think 5% so far, 5 or 10%. Yeah. Anyway, we're going to look at that in a few. So let's go back here. That's it with the CPI. I'm not going to go deeper talking about that, but for the sake of just looking at that report, let's look at it and see what I am talking about. These energy prices. So here we are. As you can see, this is the CPI. This is the CPI for the month of August. The energy index here, energy, was 5.6, and this is a monthly change. So yeah, this is a monthly change, and it was that high. Another one here, you can see energy commodities 10.5, gasoline all types 10.6, and fuel oil 9.1. So this whole energy sector, as you have seen, it's it's pretty significant. Yeah, the increases are quite significant. That of course is because of the oil price. So if this is the month over month change, you can expect even the yearly changes are going to be big going forward. As you can see in the previous month, there were no significant changes. In fact, here on May, you can see the decline was very big. But these are the months. So yeah, there's also a decline here, but they were just small figures, no double digits. But now we got a 10.5 increase on the monthly change, and of course, full 9.1 increase in the monthly change for the fuel. So this is of course going to mean that fighting inflation is going to be hard, because these high energy prices are of course going to be transmitted onto every other sector, every other commodity. Yeah. So now let's go back to the calendar and see what we got on Thursday. Yeah. So here we are. This is Thursday, September 14th, and yeah, these are the releases we'll be focusing on. So there was a European Central Bank interest rate decision. There was a surprise hike of 25 basis points. You can see the market was expecting a pause, and the previous one, was the same. So there was a surprise hike of 4.5 of 25 basis points to now 4.5. And what's going on here is that the European Central Bank, they've been hiking rates like for 10 consecutive months now. Yeah, this is 10 months consecutive. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, and see that's 10 consecutive months of hikes, delivering them every other meeting. So yeah, with these hikes, they said now, yeah, you would expect that if a country is hiking interest rate, especially a current country like the euro, you would expect that their currency is going to gain some strength. But no, as you saw, the euro became very weak after this monetary policy statement release. Let's look at the chart. I believe it's good I show you this before I continue. Here we are. As you can see, there was a significant decline here. This is during the hour of that monetary policy statement release. So okay, yeah. So as you can see here, there was this initial uptick, and then the downtick continued. The downtrend. Okay, there was an impulse. There was an initial impulse, upward impulse, and then it was wiped out, and it just lost, and the losses continued and closed the day very red. So one thing you need to understand about this, why this happened, is because now let's go back to the monetary policy statement and look at it. here we are. This is the monetary policy statement released by the European Central Bank yesterday. This is, yeah, on Thursday after they hiked the rates. So as you can see here, inflation continues to decline, but still so decided to raise three key ECB rates by 25 basis points. So as you can see, them hiking while the market was expecting a pause is what's probably caused the initial upward impulse you've seen back there. That's what caused that impulse. And then as you continue reading through, you can see they revised some of the inflation expectations upward. There was a downward revision on some inflation expectations. But this final paragraph, this is where now things get hot. So, based on its current assessment, the Governing Council considers that the key ECB interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to the target. So, essentially, what they're saying here is for now, this is the last one. We don't want to hike rates again. We just think we've reached at a restrictive level, and going forward we're just going to hold rates high and probably not think about hiking as much as we were in the past. So this is saying this is almost like saying we think we're coming to the end of this tightening cycle and no more hikes. We're just going to wait for the timely return of inflation to the 2% target and then probably start cutting rates at that time. So, yeah, this is the statement now that's weakened the euro totally, and it's likely going to weaken the euro even in the coming days because the interest rate differential between the euro and the US dollar is a full 100 basis points. Yeah, the, the Fed, the Fed, these guys, the Federal Reserve of the US, the interest rate is at 5.5. Yeah, the range is at 5.25, 5.5. And yeah, you can see the ECB, the rate is 4.5. So yeah, between the Fed and the ECB, there's a differential of 100 basis points, a full percentage point. So of course, that means the dollar is going to maintain its strength against the euro for the foreseeable future in the coming few months, probably even in the next year, because it is likely that the European Central Bank might start cutting rates sooner than the Federal Reserve. And yeah, let me go to these other readings so we can understand that. The core PPI. Now let's talk about the PPI first before we talk about the retail sales. So as you know, the PPI is an inflation measure showing inflation at the wholesale level, wholesale prices. PPI stands for Producer Price Index, and as it says, is the price index for producers, the prices manufacturers are selling their goods at. And you know, manufacturers sell their goods at wholesale prices to, not to retailers, but to the, what do you call them, supply managers and shop owners. Yeah, they buy from factories at wholesale prices because they buy large volumes. So the PPI 0.2%, this is the core PPI, same as market consensus, and this was slightly higher than the previous reading. This was slightly higher than the previous reading, and the previous reading was also revised higher. The previous reading was 0.3%, but this 0.4% means there was an upward revision. So yeah, there's that. Now the PPI. Now this is Producer Price Index for all items included. 0.7%. very high, almost double the market consensus and almost double the previous reading. In fact, this is over double the previous reading because even here, let's delete this. Even here, the this 0.4% was revised upwards from 0.3%. So yeah, this 0.7% was greater than double the last month's reading of 0.3%. Now, of course, this means if wholesale prices are rising and they're rising this much, that of course is going to mean that consumer prices are also going to rise in the next month because these wholesale prices, these are prices for inventories. And as you can see, yeah, in over the last year, this 0.7% has been the biggest increase we have gotten so far. So yeah, you can expect even the CPI in the next month CPI is going to be very strong. As you saw me talking about these other thing, the previous month's CPI reading, and I believe I talked about this PPI and why this 0.4%, this at the time it was 0.3, why this 0.3% reading was going to be reflected in the next month's CPI, and you have seen that happen. So yeah, let me not talk too much about that. Let's move on to the retail sales. Retail sales 0.6%. This was better than expected, 3 times better than expected, and yeah, even the core retail sales was above the estimates. So one thing about retail sales is just let's just call this a measure of consumer demand because it's the volume of sales, and if people spent more money this month than last month, that of course means the consumer is still strong, and yeah, there's still the threat of demand pull inflation. Yeah, when this is when high demand raises prices just like that. So yeah, if the retail sales are too strong, that of course means inflation is also it's also a threat to inflation. Yeah, something else is the jobless claims numbers. You can see they were below the estimate, and this means there are less unemployed people than the market thinks. This was revised upwards from 216K. Yeah. So this means there are less unemployed people than the market thinks. So this of course goes to show how strong the labor market is, how resilient the economy is, and yeah, these numbers for the US dollar here, retail sales, PPI, jobless claims, they're just showing how resilient the US economy is and how hard it's going to be to fight inflation. Yeah, this of course means for inflation to get back to 2% and stay there, that's going to be a tough job for the Fed, and that's probably going to need interest rates to stay higher for longer. Yeah. And that, of course, that's it for this video. Now let's go to the chart. There was something else to show you the chart. Here we are. So, as you heard me talk about the oil prices, this is the US oil monthly chart. So far this month, you can see oil is up 7%, 7% this month so far. And we are halfway through September. So, yeah, that's going to be reflected in September's CPI when we get it in early October. Yeah. And of course, you can see on July here. Yeah, this is July. The increase was 15%. 15%. You can see this top. So, yeah, the increase was 15% for this one on the month of July. On the month of August, the increase was 2%. So, oil prices have been on the rise, and If this month monthly change is starting to come in double digits increment, that of course is going to mean fighting inflation, especially in the US, is going to be very hard. And yeah, the inflation readings are just not going to come down as consistently as the Federal Reserve would want. So yeah, this of course means rates are going to stay high for a while and possibly even deliver more hikes if necessary. But for now, it's not looking good. It's not looking good. Something else I was to talk about is the euro, of course, the euro dollar. So this is the trend that has been a general downtrend here, and as you can see, price has been forming lower lows and lower highs. So currently, where price is at, I'll just wait for it to form a lower high, and then just wait for it to form a lower high, and then short. Probably it's downtrend is going to continue, considering those two main factors I've talked about. So yeah, another thing with this chart, let me see. Another thing with this chart I was to look at is, yeah, this is the daily chart of the euro versus the US dollar. So you can see there has been price swings. So there's a downward swing here, an upward swing, a downward swing, an upward swing, and then a downward swing now, and I think it's going to continue. So these lines, the blue lines, yeah, these blue lines, they represent the dates of European Central Bank monetary policy meetings. Yeah. Then these other ones, the faint red lines, they represent the dates of the FOMC meetings. For yeah, these are central bank meetings for the two economies. And you can see every time there was a meeting, that's where the price flips. Here it started this downward swing, and then here the ECB started the upward swing, and then here the central bank meetings, the ECB meeting started the downward swing. And then this other swing came by, of course, started a bit early, and then yeah, on the day of the European Central Bank meeting, the impulse came. Yeah, the impulse was there, and then also a retracement, and then the impulse, and then now price started falling. So now, yeah, this is probably going to continue. This downtrend is probably going to continue until let me see. So this is one level I'm looking at. Uh, uh, yeah, this one level I'm looking at probably during the FOMC meeting. On that during that week, we're going probably price is going to get this low, because initially I was waiting for price to come to this low on the European Central Bank monetary policy day. And yeah, you can see on this day, that's the day where let's zoom. And you can see on this day, that's the day where it's fell to that zone. So yeah, this downtrend is likely to continue and likely to remain very strong. So yeah, on a short-term perspective, let me switch the chart again. Yeah, I usually switch my charts because every time I look at this, I just want to see something clear, something clean. So yeah, from this you can expect what do you call it, a retest. Yeah, a retest of this support. Probably if price is going to form a new resistance there, and then yeah, probably a new resistance is going to form there, and then price is going to continue falling. But that remains to be seen, of course. All of these are just probabilities, and we have to wait for the market to come to us. And with that, I am done with this video. I hope you learned something new, and yeah, see you next time.